very warm welcome. I am Ruchi Sharma. Chief Economic Advisor V. Ananth Nageswaran has called for greater self-accountability among regulators, urging them to strike a balance between fostering innovation and addressing social costs. Speaking at the 2024 Global Economic Policy Forum organized by the Ministry of Finance and Confederation of Indian Industry, Nageswaran emphasized the importance of regulatory transparency and responsibility in sectors like cryptocurrency, online gaming, and emerging technologies.
We need to be very sure what are the criteria we want to set up for the regulator to be not standing in the way of so-called innovations. We are a low-income country and we have an extensive amount of financial illiteracy, which is of course true in developed countries as well. So in that situation, how do we distinguish between not standing in the way of moonshots, and in which sectors do we have to be more conscious of social costs and benefits, whether it is crypto, bitcoins, and online gaming, etc. But to offset that, I would also say one thing. The same principle of transparency and social costs and benefits that we want to apply to regulated entities and some of the financial innovation should also apply to the regulators themselves. But they have to live by the same principles of transparency that the regulated entities are expected to live by, which means information sharing by regulators. Why are they proposing a particular regulation? What is the information at their disposal that is prompting them to contemplate it? What are the goals that they seek to achieve with that regulation? And what is the terminal date? And what are the criteria by which they will stop this and then retract? So in some sense, regulators have to be conscious of the limits of their unelected power. They are unelected power, and by definition, unelected powers are normally not held as accountable as elected powers are. So they have to impose it upon themselves. In other words, there has to be an accountability on the part of the regulator, and they have to be conscious of the fact that they represent unelected power, and therefore that responsibility to wield power consciously is also something that we should demand of regulators.
He underscored the importance of defining clear criteria for regulators to avoid stifling innovation while ensuring that economic activities align with societal goals. Nageswaran highlighted that regulators should adhere to the same principles of transparency and accountability expected from the entities they oversee. XRP, the native token of the XRP Ledger Network, surged during the US afternoon hours on Tuesday as Ripple CEO Brad Garlinghouse said the company's much-anticipated stablecoin obtained regulatory approval from the New York Department of Financial Services. XRP rallied 10% following Garlinghouse's announcement in a broader crypto market bounce, erasing today's losses. The token was up 6.8% over the past 24 hours, outperforming Bitcoin. Tether, the largest company in the digital assets industry, has announced the acceptance of USDT by the Financial Services Regulatory Authority as an accepted virtual asset in the Abu Dhabi global market. This approval enables authorized persons operating and licensed by the FSRA to offer pre-approved services related to USDT, advancing the region's leadership in digital asset innovation. This announcement comes amid the rising adoption of digital currencies in the United Arab Emirates, reflecting the nation's proactive approach to integrating traditional and digital finance. Microsoft shareholders voted against a resolution to add Bitcoin to the company's balance sheets during the first annual meeting on December 10th. The National Center for Public Policy Research, a pro-free market think tank based in Washington, D.C., had proposed the resolution, framing it as a corporate duty to provide value to shareholders through profit diversification. On December 1st, Microsoft's board heard a 3-minute speech from Bitcoin bull Michael Saylor, who claimed that Microsoft could add almost $5 trillion to its market cap if it were to go all in on Bitcoin. However, Microsoft's board was unswayed ahead of the vote. Bitcoin mining heavyweight Mara Holdings bought 11,774 Bitcoin for $1.1 billion at an average purchase price of $96,000 on December 10th, while its hash rate exceeded 50 exahashes per second, an industry first. As of December 9, Mara held 40,435 Bitcoin worth $3.92 billion at a current price of around $97,000. Mara has made a 12.3% BTC yield in the fourth quarter and 47.6% this year, according to a December 9th filing with the United States Securities and Exchange Commission. South Korea's cryptocurrency sector is facing challenges due to martial law, which has paused crypto-related legislation until mid-2025. However, key developments include a delay in the 22% crypto profit tax to 2027 and a sharp 30% drop in Bitcoin prices on Upbit. The lack of progress on laws like ICOs and crypto securities is causing concerns, with businesses fearing investment loss to other nations. While the Financial Services Commission has introduced basic corporate crypto account rules, broader issues remain unresolved, risking South Korea's global competitiveness. Bitcoin recently hit an all-time high of over $103,000, prompting Riot Blockchain to purchase $68.45 million worth of Bitcoin, making it the second largest miner with $1 billion in holdings. Institutional interest led by firms like MicroStrategy has pushed the crypto market past $3.2 trillion. Mining profits have surged post-halving, with firms upgrading infrastructure to meet rising hash rate demands. Analysts predict Bitcoin may exceed $150,000, driven by favorable regulations and market expansion. Solana is experiencing significant volatility, with its price dropping to a multi-week low and investor confidence waning. Funding rates have plummeted by 81% in 48 hours, reflecting a shift towards bearish sentiment as traders hedge against further declines. User engagement has also dropped, with active addresses hitting their lowest in December, raising concerns about reduced liquidity and adoption. Currently trading at $219, Solana faces a critical resistance level at $221. Circle Internet Group and Binance have announced a strategic partnership to accelerate global adoption of USDC and other digital assets. Revealed during Abu Dhabi Finance Week, the partnership integrates USDC into Binance's offerings, including trading, savings, and payments, while Binance adopts USDC for its corporate treasury. Circle will provide advanced technology and liquidity tools to enhance user experiences, and the collaboration aims to develop new products to embed stablecoins into everyday finance. Leaders from both companies emphasize shared goals of innovation and expanding crypto's accessibility worldwide. Coincheck's Dutch parent company has listed its shares on Nasdaq under the ticker CNCK following a $1.3 billion merger with Thunderbridge Capital. The Amsterdam-based holding company controlled by Japan's Monex Group also listed warrants under CNCKW. This marks a significant milestone for Coincheck, which Monex acquired in 2018 after a major crypto theft. The reverse merger generated $31.6 million in gross proceeds and highlights Coincheck's integration of Japanese business strengths with US capital markets. This listing follows similar moves by other crypto firms such as Coinbase in 2021 and Bakkt in 2022, while eToro is reportedly planning an IPO for 2025. That's on this bulletin for now. This is Miruchi Sharma signing off. Do like, share, and subscribe to 3.0 TV. And for more information stories, log on to our website www.3worldtv.io or scan the QR code.